T-Mobile set up a really nice short side trade setup here that gave you a simple pattern to take advantage of a really nice plunge. In this video, I want to show you how to spot these yourself. It's quite simple, and as soon as you know how to spot this pattern, you'll be able to find these setups easily. Now for this example, I'm using T-Mobile. Why T-Mobile? Well, it was one of the stocks which appeared on our Stock Volatility Box live scanner. Today, T-Mobile appeared on our scanner, breaching its daily Volatility Box models, and that too the conservative Volatility Box models. That doesn't happen too often. Today, the trade setup in T-Mobile was a short, and we even had a backtest to help give us some confidence that, hey, from this point, more than 50% of the time, we tend to see price sell off. So these are all your clues that, hey, T-Mobile is the candidate to be looking at for a short side trade setup here. Now you come into the actual charts, and I'm going to take you through this play by play starting off with the morning. Now starting off early in the morning, T-Mobile rallied all the way into its aggressive Volatility Box models, and it did this by 7 a.m. Pacific. So 30 minutes after the market opens, we see enough signs from the bulls here that there's strength. They can take price up all the way into the aggressive Volatility Box models like it's nothing. Now what's interesting is for the next 90 minutes of 7 a.m. till 8:30 a.m. Pacific, which is till about here-ish, we just chop around sideways. You can see that. T-Mobile loses all of the bullish strength that it had early on in the morning. Now after 8:30, so in the final 30 minutes before the lunchtime hour, we see the bulls come in and break price up above the morning high. Now, if you've watched any of my previous videos, you know I like to sit out the lunchtime hour. That's the 9 to 10 a.m. Pacific hour. I've found nothing good usually comes in my trade plan when I take trades in this hour. So we've now hit the 9 to 10. I'm really just sitting on my hands, but at this point, it's starting to get really tempting to look at T-Mobile for a short side trade setup here. We're starting to see 1 and 2 different overbought confirmation signals. Now we continue going into the lunchtime hour, and T-Mobile continues to keep grinding up higher. Now as we hit the end or the tail of that lunchtime hour, so now this is 9:40, we're starting to hit the end of that lunchtime hour, to me it feels like price is starting to flatten out. We have 1, 2, 3, 4, and 5 different overbought confirmation signals up until this point, and that morning strength that we saw where T-Mobile just rallied right away seems to have dissipated. Now we keep coming forward, and as soon as we're towards the tail end, this is 2 minutes until the lunchtime hour ends, 9:58 a.m., you'll see we have this big red bar. This big red bar also has this pink dot, which tells us that the 3 EMA has now crossed below the 8 EMA. Momentum has switched. So this candle right here was my cue that now I'm expecting the bears to kick into full gear. Now, if you notice, that's not the candle I used as the entry. The candle after that, we bounce around, and it's 3 candles after that that I'm using for my actual entry. Just this place where we're still inside of this large red candle, but we have yet to see any signs of the bulls able to take price above this high. It feels like now the bulls have lost all of the strength that they had from early on in the morning, and the sellers have very clearly won. Combine that with the end of the lunchtime hour where we see these reversals kick in anyways. So I took my first entry in this candle, second option in this candle. For those of you that like to trade options, the 4 days to expiration series are the ones that I like to use here, or the shorter dated ones. You didn't have as much volume as you'd like to see. Also, the options weren't as cheap as you'd like to see, but certainly an inexpensive way to play this short compared to shorting 100 shares. Now, as soon as this candle ends, take a look at what happens in price. It's almost as if a rug were pulled from underneath T-Mobile. There's no looking back. T-Mobile from that point has almost what you would call a V-shaped sell-off straight back down inside of our aggressive models. I took my first exit off in the first leg down and second exit in the second leg, and I still didn't nail the perfect ending entry here. T-Mobile continued to dip a little bit below even where I got out. Now, T-Mobile was just one of a variety of symbols today that hit the same criteria. But if we were to zoom in one more time to sort of see what the clues were, we had early strength, and then we saw that strength start to dissipate a little bit. What took 30 minutes then took nearly 2.5 hours for us to achieve, and that too, we didn't get close to achieving it. We hit our conservative volatility box models, and we also had a backtest which told us that, hey, from this standpoint, we expect to see price reverse more often than not. And that's exactly what it did. We had some nice opportunities to enter where price was still a little bit calm, and as soon as that calm ended, there was really no looking back for T-Mobile. Some really great ways to play this with options for those of you that are intraday options traders, as these are some of those moves that most folks have to wait several days for that we get to hit in just a few hours or minutes depending on the position. Hope you found this video helpful. Take care, everyone. For those of you interested in learning how to day trade with both our volatility box models along with our indicator set and the way we look and break down markets. Take care, and I'll see you in our next update.